I have never been so sick to my stomach of the lying and fibbing that goes in. And anybody who's done any mathematics understands this, except they're not allowed to say anything because Ray Dalio gets on TV and says he doesn't think the solution is going to be Bitcoin, and then describes what he thinks the solution is going to be, and he fucking describes Bitcoin. Like, this is so asinine, and I've never seen anything like this. So we're living in clown world 3.0. Okay, and the people running this clown world need to be challenged by the people who understand mathematics. And it's not difficult math, guys. It's grade 11 math. So please keep challenging these people. They're lying through their teeth. It cannot be solved any other way.
Introducing Greg Foss, an investor with over 30 years of experience. Greg has spent his entire working life perfecting the art of trading high-yield loans. Greg is an executive and shareholder at validuspower.com, a company devoted to developing strategic initiatives within the Bitcoin ecosystem, and he has found his calling in the Bitcoin community. In this video, Greg explains why Bitcoin may be the finest asymmetric bet of our lifetimes, despite the Fed's lack of checks and balances, growing debt policies that don't work, the difficulty of fiat in finding yield, zombie countries, and the debt spiral. Let's watch the video and hear Greg dissect the Fed's stupidity and the lacunae of certain so-called financial gurus.
The world has turned into a very short-term oriented in terms of the investing time frame. Everyone is a trader. Everyone is got FOMO in one direction or another. A lot of this rally, in my opinion, is driven by sector rotation coupled with your short covering. So what you have is value stocks had a bid going into the end of the year, and everyone was selling NASDAQ. But when you get offside on that, you get afraid of not being weighted to your benchmark. You tend to cover some short covering in the long duration assets, which are, you think of tech stocks. But I think I can break it down into one simple trade. Larry, you tell me what you think. It's all a function of the DXY and the strength or weakness of the US dollar relative to other global fiat currencies. As you know, DXY topped out around 114 and had been on a decline since then. That was coupled with some stabilization in the equity markets and certainly risk assets, emerging markets. But coupled with that is going to be a very different outcome for the Fed, because as the US dollar weakens against there's only 6 of them in the basket. Primarily the euro and the yen are the two main components. You'll have oil, which is priced US dollars. As the US dollar weakens, oil will strengthen, and that'll put pressure on the Fed because of inflation. So I like to break it down in terms of the DXY. When the DXY weakens, you see gold rally, you see risk assets rally. To an extent, I think the recovery in Bitcoin is a function a little bit of both DXY, and I don't believe it, but I don't believe in it, but the market does in a risk-on attitude. So if I had to say one thing, I'd watch DXY as an indication of whether we're on the wrong side of the trade in the long term or not. And the DXY is, I need to stress to everybody, all fiat currencies are melting cubes. It's just a relative rate of decay that is represented in the DXY. So the DXY means that the US dollar is not, it's certainly debasing, and it was debasing far less severely than the Japanese yen and the euro. But since the Japanese moved their peg on their yield curve control, that has caused the yen to strengthen. So we all know that it's a race to the bottom in fiats, but the DXY measures it as a relative rate of decline. Everybody knows when the DXY weakens, risk assets get a bid. So that covered with short covering. Don't overlook the long term. Hard assets win and DXY weakens. A spiral that cannot be solved. You have to print money. It is the error term. It's the only way of solving this runaway debt spiral where your net burden is building organically because of the coupon on the debt. Okay, guys? If you don't understand that, you failed grade 11 math. So everybody's running around trying to split hairs. And the reality is quantitative easing infinity, QE infinity, is built into the mathematics. It always has been, and the Fed can pretend they're going into QT for the short term. It doesn't work in the long term. So there will be a solution where the Fed has to blink and admit, we have to print forever. So don't take your allocation to Bitcoin out of your gold basket. You take your allocation to Bitcoin out of your fixed income basket, because fixed income is a contract, and it's a debasing contract. It's built in fiat, and fiat is programmed to debase. So what are you going to take your allocation to Bitcoin? I don't care if there's Bitcoiners that don't like gold bugs and gold bugs who don't like Bitcoiners. You guys are missing the bigger picture here. It's so much bigger than the combination of gold and Bitcoin. It's about a Fed projection where they think it's normal that they're going to be able to borrow 4 times their revenue base or their GDP. That's going to solve this debt spiral. This is what blows me away, Sam. We have never been here before. The point of no return is past, so we cannot compare this anywhere in history. It started with a financial crisis. We rescued the system. First time in my life was the Latin American debt crisis. That's the first time we kicked the can down the road. Then it was long-term capital management. Then it was the great financial crisis. And then it was COVID. And now it is over. You cannot compare this time to any other time because our debt burden is just so darn large. The mathematics don't allow it to be solved any other way. So we can look back to different periods, but the reality is we've never been here before in terms of a global debt burden that is so large compared to global GDP. And you can break that down by country, and you could say, oh my goodness, here's the crazy thing. In the end of World War II, the USA had a debt burden, just the federal debt, that was right around 100% of GDP or 1 times. Hey, the USA was a trade exporter then, a global exporter. It doesn't work when you are a global importer. So again, there's no other time in history, because we have just been so irresponsible in building the debt burden. You can't compare it to any other time. I don't want it to go kaboom, but unless they keep printing forever, it goes kaboom. So there's one solution. Infinity, QE infinity. We're going to pretend inflation doesn't exist because we're going to rewrite the definition of inflation to bring it down to this mythical 2%. Guys, inflation compounds, okay? Just because you can claim victory by bringing some stupid number down to a 2% annualized today, based on new mathematics, doesn't mean that you get out of jail for free for increasing it by 15 or 25% annually on an equivalent basis a couple of years back. I have never been so sick to my stomach of the lying and fibbing that goes in. And anybody who's done any mathematics understands this, except they're not allowed to say anything because Ray Dalio gets on TV and says he doesn't think the solution is going to be Bitcoin, and then describes what he thinks the solution is going to be, and he fucking describes Bitcoin. Like, this is so asinine, and I've never seen anything like this. So we're living in clown world 3.0. Okay, and the people running this clown world need to be challenged by the people who understand mathematics. And it's not difficult math, guys. It's grade 11 math. So please keep challenging these people. They're lying through their teeth. It cannot be solved any other way.
In conclusion, Greg Foss has brought attention to the need for more openness and realistic policy in regards to the method of expanding debt. And individuals should be more pragmatic and not blindly follow the advice of those in positions of influence. They might have a lot of respect for it. We're glad you decided to check out the video. Leave a comment with your ideas down below, and we appreciate you tuning into Market Empire. If you enjoyed this video, please give it a thumbs up, share it with your friends, and subscribe to the channel.